going on, everybody? We're going to take the time out to take a look at some charts, some markets that I'll be trading during this week. I do think they're going to have the highest probability, setups for us to obviously make as much profit as possible. So I wanted to go over some of those, actually teach you or just kind of show you what I'm looking at and how I'm coming to that conclusion. So that way you can take all the knowledge and the information given here, apply that to your own individual trading, and obviously become more profitable on your own. So I do have a watch list here. So I'm actually going to start here with the GBPJPY. Now, a lot of the setups here are very simple. Now it's just more along the lines of just allowing the markets to develop and really show us that the moves that we are looking for are in fact going to be made. Now, at the time of this recording, it is on a Sunday. The markets have just opened. So the lack of volatility is, or the volatility that we do have on a Sunday is the lack of it. There is going to be really no movement. So we're going to be getting ready and gearing up for this trade week. So obviously, no trades at the time this video has been placed, and there will be no trades being placed unless there is a solid confirmation on all of our setups. So real quick, before I do anything, the first thing I always want to make sure that I'm doing with any pair, with any market that I'm looking at, is to make sure that I'm checking the higher time frame, really ensuring I'm seeing the bigger picture. Now, we're going to speak on a few things here. We're going to get in detail and a lot of depth, so hopefully you guys can learn a lot and understand exactly what I'm putting down. So I do understand that right now, the overall market is very bullish. I know that the market structure is creating higher highs and higher lows, and we can see the market actually just in a very upwards motion. But you can have sells in a buyer's market and buys in a seller's market, and obviously buyers or the trend is not always going to last, right? It's not always going to be straight up, straight down. There are going to be what we would call a reversal. Now, there are a few things before we speak on the reversal, but what I do understand is right now we are at a level of strong structure support. You can clearly see that because the candles here, as you can see, the market cannot break below that general level. So we're going to highlight that as a structure point. Now, I don't call these order blocks or supply and demand zones. Support and resistance is just a very simple concept, but I just like to call it price and structure, because we can see how the market is not breaking below that. So we can see that that will be considered our buy area if confirmations are given. So right now, with us being at a strong level of structure, I will be identifying some potential buys from this range. Now, the overall idea, and my honest opinion, is I do think we're going to see more sell coming out of this market. Now, I know I'm saying buy zone. We're at a buy zone. Yes, absolutely, because you always want to buy at a low point. But the reason why I'm looking at this as a strong sell is because, in case you guys haven't noticed, there's a pattern here. Now, that pattern is very important. That's what you will call a head and shoulders pattern. Now, simply put, it is a reversal pattern, and usually you'll get the trend that it's currently going, or in this case, bullish, will come to an end, right? Now, you would start to see the market creating a different market structure. We can start from these highs and these lows, draw that initial trend line, and you can see that the market is creating lower highs now and lower lows until we reach this market structure, which again is going to dictate some potential buys. Now, for me, I honestly do think that this week, if we can continue to see with our candlesticks being one of the major factors, especially for me to place and enter a trade, they're very important. I will be coming out with a video for you guys actually on my top 5 candlestick patterns or candlesticks that I personally like to use in order for me to place an entry or at least identify the direction of the next current move. So again, coming to this level, coming to this level of structure, we are going to be able to identify potential buys. Now, I, again, want to be able to see that with my candlestick patterns. And right now, we do have a very nice looking candle. Obviously, it's just opened. We have tons of time for this candle to move around and really develop. So it might not look like this tomorrow morning when we actually jump onto the New York session to really actually place our trades. But the one thing I am identifying is the candlestick itself. Now, we see that there's a small wick to the downside, and there's no wick to the upside right now. What that means is that the volatility, or at least buyers, are very much in control. And this current, the previous candlestick here being what it is also showing me a level of rejection. One thing I want you guys to also understand is wicks equals rejection. So anytime I see wicks being left at a level of structure from a candlestick, that's telling me that there was an attempt to break through and it could not. So if we actually scale down to a smaller time frame to kind of understand some more potential ideas, we'll get some further confluence on maybe why this will be a potential buy before it reaches our sell zone. So I'm actually, before we actually do that, this is also considered a double top up here. That's actually extremely important for us to identify, this being the double top area here. Now, the reason why that's important is because we're going to reach a level of structure and price that's very important for us to look for potential entries to the downside, where that sell could be the catalyst needed to break this level of structure. So the reason why we're highlighting this double top is, again, because there was a level of resistance here. You can see that the level of resistance was respected, and this trend line, now that I actually corrected for to be more accurate and proper, we can see that that trend line there is also being used. A trend line is just a dynamic level of support or resistance. It's following the market's movement. So what we can see is, since that trend line has been respected, we have a double top at a level of resistance. That's telling me further confluence for selling pressure at a specific point, because obviously we're not going to sell at a low point. We got to be very smart about that. So the one thing I am going to look at right now is obviously this area of structure here. In case anybody does not know, a double top and a double bottom is a reversal pattern. It looks like that, at least for this case, for the double top. The most relevant level of structure for that double top is there. A lot of individuals think that you're entering your double top here. Absolutely not, because what can happen is, with a lack of confirmation or an actual break of structure, or market structure rather, this can continue to break resistance and be a buy. So when we have the break of this middle point, you can call it your B point, you can call it the middle, whatever you want to call it. Once we get back to that price point, we are looking for a potential opportunity. Now, obviously, we always want to add confluence with all of our trades. We're not just simply going to identify just one aspect. So we do have this level of previous structure, that support. And I know we're still on the daily. It's very important for us to get the bigger picture always. I'm going to get rid of some things so no one's confused. We're going to leave that right there. Now, I'm also going to add a Fibonacci retracement ratio, or tool rather, because I definitely want to make sure that with that level of structure that I'm identifying, there's other forms of confluence, something that's telling me that, okay, we have multiple levels of support here. We have multiple levels of resistance here. When you have multiple levels of confluence and at a structure point, that dictates heavy entries. So as you can see here, we have a general zone between the 50 and the 61.8. Now, if you guys are wondering which fib ratio should I always use, I promise you, you should only use the one that makes sense. And it's the ratio where the market is going to reach and gives you action. I want everybody to take this with you as well. This is called price action trading. What you're doing is you're identifying the most relevant and important levels of price, and then the actions, confluence, that revolves around there. So I can see right now I found a nice little zone of price, because if it reaches there, we can have a selling opportunity. Why? Because as you can see here, this was a level of previous support, which is now going to end up as a level of resistance. You can also see that we have this trend line that's intersecting that area that can also play a factor, meaning that the market could reach this point, kind of consolidate, get your confluence with your structure, your fib, and then get a touch of that trend line and then push a lot lower. So I would be expecting GBPJPY for the meantime right now to be bullish up until this range. Now, when we scale down to a smaller time frame, it's going to be important for us to identify those confluence as well. I think a lot of people have the misconception of just trading off of the one time frame or a small time frame. Again, we want to understand everything. When I scale down to a smaller when I scale down to a smaller time frame, there's really not too much like I would really use based off the 4 hour. Yes, there are some candles that we can use, just to be very specific, that one. Again, I'm not going to go into detail with the candles as of yet. I will be releasing that video for you guys later on this week, so that way everybody has that to go over as well. But there's not much I would see here. But when I scale down to the 1 hour time frame, there's a few things I can see. I'm actually going to get rid of all of the analysis and be detailed here. This is considered a double bottom. Just like we have the double top up there that's giving us the idea of sells, on the smaller time frame, we have the idea of a double bottom. That's important. That double bottom is telling me that the market is no longer looking for sells, and it is most likely going to respect that level of structure, that support. And we're getting that confluence by getting the candlesticks to give us a pattern. Patterns being the double bottom. So there's also, I know it might look a little weird, there's also that inverted head and shoulders pattern. Now, a head and shoulders pattern will always be valid until the head of the pattern is broken, meaning these lows need to be broken by the right shoulder. The right shoulder has not broken those lows. It is respecting that structure point, kind of giving us a double bottom and a head and shoulders pattern, or inverted head and shoulders pattern, all in one. So that's telling me right now that we should be looking for buyers to come into this market. When should we buy? That's probably the question everybody's wondering right now. I'm gonna mark this level of structure here up. Now, the reason why I'm doing that is because you can see that this right here, over here, was a level of support. Now, when it broke through, it acted as a level of resistance, again, right here. We need to break above these highs in order for us to get the idea that momentum will carry to the upside for the buys, at least to our level of structure where we are looking for potential sells. When we scale to a smaller time frame, that area is pretty far up. That's a great opportunity in trade setup. And then from there, we identify our sells at that generated area. Oop, tools don't want to work. Here, there we go. So I will be looking for sells here on GBPJPY around that general area. But until then, this week, I do believe that correction will reach this point so we can actually look for buys throughout the week. So hopefully that's not confusing. Again, I'm just trying to give you multiple ideas, the buys and the sells, the overall idea, but more along the lines of the immediate idea as well. We want to understand what's going to make us money right now and also understand the next potential moves. That way we can make our money, meaning take our profits, and then go along with the next market movement. So GJ completed. All right, now that we got GJ out of the way, we're going to go ahead and take a look at EURCAD. Just another basic setup, I would say, as far as the development of this initial market. Well, again, I'm only going to be using what the market is leaving behind. Nothing too overcomplicated, nothing too overbearing as far as analysis and strategy. I'm literally going to be using the market structure and price because I believe that these barriers or these areas of, just general price is going to be where a lot of the best opportunities are going to be made. As you can see, I mean, it's very clear to tell exactly where the market has made previous moves before. You can identify where they're going to make moves once again, because those levels of structure and price are going to be the most important, and I would say the number one thing as far as your trading is concerned, as far as entries are concerned, the understanding of your market structure, where the market even may be going, the direction, the volatility. It's very important to understand just a very simple concept that I think is overlooked, which is just support resistance. Now, obviously, there's way much more that goes into it, but letting that be I would say the foundation, the blueprint needed for you to actually start becoming more profitable. Let that be the number one thing that a lot of you guys focus on. Identifying the most relevant levels of structure and price. And that's exactly what we're going to do here with EURCAD. Just another very simple basic setup. Again, as we can see here, I'm on the higher time frame, being the daily. I can even go into the weekly. There's times where I do use the weekly and the monthly. I don't really start doing stuff like this and start drawing all these insane trend lines from so far back. But can you use this type of analysis to gain some type of advantage and obviously profits? Absolutely. But I really do focus on what the market is giving me for the right now. I like to have trades anywhere between 50 to 100 pips. And you could do that in one trade every single day, buying and selling no matter what. So I'm definitely going to take a look at this real fast. And it's a very simple concept. Again, I'm going to go down to the daily. It's just very, you can see a lot of the market movement, but also smaller moves and be able to go from there. The one thing I am going to take notice of is that this here, kind of like how I drew before, this was a strong level of previous structure. You can see that this was the structure point. I'm identifying this as a support zone. Now, obviously, there's going to be tons of other structure points that you can mark up and identify. I'm only identifying what's relevant, what's going to work for me, what's going to make money. So if I can identify that aspect, that's going to be my strong, what used to be support is now my resistance point, my resistance area, my sell zone, if you will. Because as you can see, the break of a level of structure being the break is just as important as the respect, because you're never going to get a weak break of a structure point. It's going to be either a really strong candle or a really strong move. And we can see how the market broke below, came back and retested that zone, confirming and validating that market structure and price is actually important. And what can we see here? Just to use common sense, because a lot of trading is just common sense. We can see that this resistance point is held up. Now, what type of market would this be considered? Just kind of giving a couple seconds for you guys to answer that in your heads. I know you guys are just watching a recording, but I'm hoping that you guys are gaining knowledge and kind of try to trick your brains into understanding and retaining all the knowledge I'm giving you guys right now. This is what you would consider a ranging market. Now, a ranging market is just exactly how it sounds. You're ranging from side to side, basically up and down, from the attic to the basement, from upstairs to downstairs. So what you're doing is you're basically just trading this initial range. So this is why I say EURCAD is a very simple setup. We can identify, not even identify, or we know, we can see it, a very valid and a significant level of structure being this resistance point. How are we going to be able to determine and really confirm that this resistance point is in fact relevant and strong? Well, look at the previous behavior of that candlestick. Look at the previous behavior of the candlestick that closed on Friday. That level of rejection is strong. Remember what I said with GJ, wicks equal rejection. And this small body candle here screams exhaustion. So what we are getting some type of rejection or the visual of it. Now, obviously we need the markets to continue, develop more and give us more of an idea. But as you can see here, we're getting what you would consider a candlestick pattern. Again, I'm going to go over the candlestick patterns within the video. So I'm not going to go over right now, but these candlestick patterns are very important, i.e. these three. If you guys don't have a cheat sheet for your candlestick patterns, I'd suggest you guys go Google one. There's tons of them. I definitely suggest you guys go study candlestick patterns. But these three right here, very important. That's actually going to be in the video. I think if I'm correct, that's the number 3 on the list for my favorite candlestick pattern. And even here on the smaller time frames, in the 1 hour, not so much. You can't really determine too much, but can you see what I see? As you might actually have to scale down to 15. That doesn't even look that great here. And the only reason why I'm only saying that is because I let the markets develop while the market, opened up earlier. And also, I just wanted to kind of just do this, not live, because I had a sense of what the markets were doing, but I didn't really see how they developed and closed during the week, or on Friday rather, before they closed for the weekend. So I'm just kind of taking a look at this as well. And I do like the fact that if you guys can see it, there is a very small but very weird looking, you're going to see it all the time, head and shoulders pattern. I'm actually doing a video on the top 3 patterns I like, and obviously you can already tell that this is my number 1 favorite pattern to identify. That head and shoulders pattern is a strong identification. It's a very strong confirmation and confluence that you want to use in order to place accurate trades. Again, because if you can understand what's happening, the actions that's happening at price, you now know where the market's going to go, which equals positive entries and profits. So I do believe EURCAD right now, since we are in this ranging market, we have respected this strong level of resistance. We will be seeing this market sell and continue to push down, at least down to this support range. And then from there, we will make our decisions. Whether it respects that zone, if it does respect that area, obviously we look for the buys. If it breaks below that point, then we know that this market's going to continue to sell. Then we will hold the sells that we have here and then re-enter some sells at the break in the retest of that area. But EURCAD is a very easy and very simple setup. So these are the 2 trades that I personally believe that we will be trading the most, obviously because we have a strong directional bias. And obviously those are the ones that just stand out right now. Tomorrow morning, obviously I will be doing a YouTube live with you guys. Obviously you guys are watching this at the time of the, at the posting. If you are a little bit late on the recording, that's perfectly fine. I'm going to be doing lives every Monday and Friday here on YouTube for everybody to take advantage and ask questions and really understand how to become a little bit more profitable. And I say a little bit only because I don't want you guys thinking that this is a get-rich-quick scheme. It is not. If anything, this is a get-poor-quick scheme if done incorrectly. And this is exactly why I'm just trying to assist, help you guys understand what to look for in the markets a little bit better, and really help you guys know what tools to be using and how to use those tools. So these will be the 2 charts that I'll be mainly looking at. We'll be going over and reviewing a lot more together during the week, but for right now, we'll start off with these. I'll see you guys in the next live. I'll see you guys in the next recording. And I appreciate any and all feedback, and I appreciate every and all of you guys here following the Legacy brand. So thank you guys. Have an amazing trade week, and I'll see you guys on the next one.